now let's discuss on the history of Indian banking. Okay, importance of banks we will refer to little later. But history of Indian banking. History of Indian banking in 3 stages. One is ancient times. One is pre-independence. Another one is post-independence. So what is the history of Indian banking? History of Indian banking can be studied under 3 different heads. One is ancient in a form of banking. Banking, how it operated, how it existed in the ancient times. And banking in the pre-independence stage. And banking during the early post-independence stage. So if we refer to the ancient time, as we refer to the definition, say bank is derived from banco, bancus, banquio and bank. German term. You know that it's a bench. People having the money would sit in a public place or marketplace and carry on banking business. What is that? Normally, they did not depend on the public money for lending. They depended upon their own. So rich people who had money, they carried on banking. They carried on lending operations at a high rate of interest. And in course of time, they developed the skill of raising the money from the public, scattered, dormant money, not earning anything. In course of time, they found that this can be better used, better applied, better utilized. Therefore, they asked the public. They started accepting the money from the public by way of deposit and promising them to pay returns for the same deposits. And with the deposit that they have, they apply the same for investment or lending. This kind of business function started, banking function started during the stage of bank, that is German, and that was all ancient. But what was the form of ancient system of banking that prevailed? It started all, as I said, bench. People had the money, would go to the public place and transact the banking operation, especially the lending business, not acceptance of money, because according to them, accepting the money from the public is lowering to their image, demean their image as such. Therefore, they would normally depend on their own money. They never, would hinder their status or prestige as such. They would accept the money for lending. They would rely on their own money for the purpose of lending. And that sort of business prevailed, banking business prevailed in the ancient stage. Of course, as and when the ancient time passed by to that of goldsmith stage. Goldsmith, there were 2 stages. One in the early stage of goldsmith business, banking business, and then the advanced stage of goldsmith. We will refer to both. In the early stage, goldsmiths used to lend money, accept their all valuables, accept their money for safe custody only, and they used to give the certificates. Goldsmith used to give. What is the function of goldsmith? That is transforming gold into ornaments, correct? And in that, while doing that, they also accepted, because they had very strong iron boxes, iron walls, iron safe, and the people in the locality, they would, for their safety, in those days, houses not like these days. In those days, the houses could be robbed in no time, because you either used to have the roof of grass, or roof of tiles, etc. If you open one tile, you can get into that. Easy robbery, easy theft can be possible. So therefore, in villages, unsafe to keep all these valuables, like the documents or money itself or the jewels. They would go to that goldsmith and deposit all that, get the certificate, get a receipt from the goldsmith. You deposit. Why did you deposit? There will be no earning of interest. You deposited all for the purpose of safety. That's what the stage of goldsmith. But let us now, in the ancient stage, how the banking functions stood. It stood in this form. One is money, merchant bankers. Merchant banks again, the ancient system of banking operations stood in this pattern. One is merchant bankers. Merchant bankers used to carry on the business of banking, like they used to rely on their own money and they used to lend for the purpose of trade or business. Their lending was primarily focused on lending or business. Remember, who's lending? I mean, who's money? Merchant bankers used to rely on their own money and they applied their money for the purpose of lending to trade or business as such. Maybe either internal trade or business or even foreign trade or business. These merchant bankers, relying on their own money, they would lend, they would allow the grant of loans for carrying on internal or external trade or business. That's how the money merchant bankers relied, as far as the lending of money is concerned, they relied their own money. Not that they never ever accepted money from the public, but usually for the purpose of their transacting that banking business, they used to rely on their own money for the purpose of lending for trade or business, internal or external. Then in course of time, money lenders. Who could be the money lenders? Money lenders are those, again, acceptance of deposits were below their prestige. They used to consider that if I would accept the deposits from the public and use them for lending to the needy, then it would be below my reputation. So therefore, even money lenders, only in dire necessity time, only in the case where they did not have money or there is a huge demand for money, in such cases they would accept the money from the public. But otherwise, for the purpose of their carrying on the activity, they would rely on deposits accepted from they would rely on their own money for the purpose of lending to the needies. And interest rates, as I said, interest rates charged by the merchant bankers are high, interest rates charged by money lenders are even higher, and the securities of your movable or immovable, or sometimes a personal security, but their recovery process is extremely harsher, and the rate of interest they charge is very higher. It ranged from 36 to 100 in this percentage, and they would give to whom? They would give to those persons whom they rely on. Sometimes on the basis of securities, sometimes even without securities, on the basis of personal security, personal affinity, not personal affinity, personal knowledge. They know the credit, they know the borrowers. On the basis of that knowledge, intimacy of the knowledge, they used to grant the loan without on the basis of any security as such. But rarely they depended for money, for their purpose of money. They are money lenders, not money acceptors. So normally they consider that acceptance of deposit is below their reputation. Therefore, they, for monetary resources for the purpose of lending, they relied on their own money as such. And then the goldsmith, as I said. Who is a goldsmith? Goldsmith are those persons who deal with the golds as such. Okay, what is that gold? The raw gold is converted into the form of ornaments by process carried on by this. But in course of time, as I said, they have got strong iron wall. They keep their jewels. And in course of time, the people in the village, they used to deposit their gold. Along with the gold, they used to deposit for safe custody. For ensuring the safety, they used to deposit that gold, that document related to their property, and even the hard cash. Instead of keeping it at home, it would be better to ensure the safety. Therefore, they would. And in course of time, these goldsmiths, they realized, see, with the gold or document or the money that they have deposited for their safe custody with us, I have issued the receipt like this, and it's a waste. You all have, it is not for banking. You people in the locality, you have deposited your valuable money, etc., for safe custody. Why it should remain dormant? Why it should remain dormant? So therefore, with the concurrence, with the consent of the, what is that called? The customers, with the consent of the persons who have deposited their valuables or the money or the, what is that called? Documents for safe custody. You have issued the receipt with the consent of that people who have deposited that. you started moving this money to others. Can I? Yeah. I will. I am agreeable. I will not deal with your valuable, but I will deal with your money you have deposited for safe custody. Hitherto there was no interest. In fact, you used to pay the charges as rent for ensuring the safe custody. But in course of time, why this money should remain idle with me? I can utilize. Anyhow, you have started doing that kind of business. See, I will, but same money will not be paid to you. I will use it for the purpose of lending to others. And in fact, I will share with you the profits I have earned. Your principal amount will be paid, and I will also pay some sort of some portion of the profit which I earn out of its lending to others. I will lend at a higher rate, and a portion of that earnings will be shared with you. People were happy. People who have deposited, they were happy. In course of time, this receipt, you understand? Whatever I have deposited with the goldsmith, he will issue the receipt. Okay, he will issue a receipt. Say for example, this is what the deposit receipt for safe custody I have, and the goldsmith is issued. In course of time, I, the customer with the goldsmith, I started transferring this. I will go to another customer. You understand? I will go to another lender. I will go to another lender. And I wanted some sort of a loan. It may be money lender. Remember, it may be money lender, or it may be any. It may be even the person's public member. And I would approach him. I want a loan of rupees 1,000. Okay, they keep this as a security. You understand? This is a goldsmith receipt. Goldsmith has issued to me in proof of having what is the document or the money or the jewels deposited with him. In proof of that, he has accepted, goldsmith. And as a result of the proof, he has issued me a receipt. And this receipt, I am passing it on for the purpose of transacting the activities. What for? In case if I need any money for my need, I would keep this as a security, or I would rather transfer this. See, I need 1,000 rupees, and this will be the security, or in exchange of this. So this started moving from my hand. I am the holder of this, and for the purpose of borrowing loan, or for the purpose of having money, I sold this. What is the value of this? It is very much mentioned. So this receipt issued by the goldsmith, that is the value. This receipt issued by the goldsmith, and I am in custody of this. This is the proof that I am the holder of that money or this document, etc., etc. When this started moving from one hand to another hand, that's a modern type of function started. What is that? A check system. What is that modern type of check system? I am the account holder. You have provided the check facility. When I issue the check to another person, it means that it's a direction given to my banker. Pay from my account this much of money to that person. When that person is issued by me a check, that person will credit the check to his account there. His banker will send for clearing to my bank. My banker becomes a paying banker, his banker will becomes a collecting banker. So a sort of transfer of money or movement of money from one bank to another bank started. This is the process of modern banking introduced by the this is the process of transfer of funds from one account to another account. That what we find today has come into picture, and we owe a lot to this goldsmith. Goldsmith banking function has got some more. I will tell you what is that. One is that deposit receipts issued by whatever receipts issued by the goldsmith started moving from one bank to another bank. Started moving from one person to another person. It is like a banking. Bank note. In discharge of my obligations. Not in discharge of my obligation. In case if I want something, then I will issue 100 rupees note and get 1 liter of petrol filled. Correct? So the obligations of his and mine could be met through this money. So banknote started moving. This is the note issued by whom? If it is a note printed by you or me, whether it should have been moving. No, it is a note printed by the Reserve Bank of India, that is the central bank of the country. So it is valued by anybody. It is valued by anybody. So in order to meet my needs, I move my money to another. He becomes older, and that money will not remain with him. It cannot be called money that way. And for meeting his needs, he will transfer further. So this is a receipt issued by the goldsmith. Over a period of time, I started moving it. When I started moving it, I met my needs fulfilled because the other person started valuing this. So the present type of banknote system prevailed. I mean, an introduction to this present type of a banknote system was given by Goldsmith. Not only that is a contribution. Goldsmith also has contribution in several other areas. Modern means of check system. What is a check system? It's an order. The customers, I am the customer because they issued this certificate, correct? After some time, even the deposit receipts issued by the goldsmith could be dispensed with. How? The depositor could simply instruct, see, I have deposited with the goldsmith some money, correct? For safe custody. Remember, for safe custody. As and when I want, he would ensure the safe custody. He will not pay you any interest. That's what the beginning. He would accept your valuables, he would accept your document, he would accept your money, but all not as a banker. All he accepted as a custodian for safe custody. You understand? As a bailey for safe custody. Purpose is safe custody. For this safe custody, you should pay. You, the customer who is in receipt of this receipt, you are the holder of this. This is the proof that you have deposited all this with the goldsmith. And you need to pay. But in course of time, moving from, in discharge of my, in order to meet my needs, I transferred this and got the loan. So this type of a modern function, in modern times, what do we find? The Reserve Bank of India issued note I am the holder of it. To meet my needs, to buy anything, I transfer it to the other person. So same way, to my needs, if I need money, I will transfer this to another person. Another person accepts because by this way, the goldsmith reputation started. Whatever receipt issued by the goldsmith started moving. That's the one thing. Second one, in course of time, this movement dispensed with. And I am the customer, of that goldsmith. I used to pay. I used to say that in course of time, kindly pay this much of money to Mr. Vishnu. You understand? So this kind of instruction started moving from the customers. And when this kind of the depositors, when they started issuing instructions to the goldsmith to pay a specified sum of money from their accounts to anyone, and on the basis of these instructions, the goldsmith used to fulfill those instructions. The goldsmith used to comply with those instructions and pay the money. Modern times, these instructions issued by the depositors to the goldsmith for the payment of funds from their account served as the basis of checks that are used in the modern banking. Today we issue. See, I have an account with the bank, and to meet my needs, say for example, I have to pay the property tax, I have to pay the insurance premiums, I have to pay the taxes, etc. I will issue the check. So it's a direction given by me to my banker to pay from my account this much of money. This was there present even during the goldsmith period. How? I would instruct the goldsmith to pay from my account to that person, this much of money. And the goldsmith started honoring my instructions. Thereby he would make the payment to the person concerned, instructed by me. And this is nothing but that particular process of, that particular function of goldsmith then would be similar to that of the present function, that is honoring of checks today. Okay. And one more, what is that? Creation of money. In course of time, the goldsmith found that only a small portion of deposits of money which the customer has made being utilized or withdrawn by the depositors, the remaining portion of the deposits were left with him only. So what to do? He began to lend a part of the deposits left, he began to lend. That portion of the deposits left with him. While lending, the goldsmith gave on the faith of the deposit receipts and not the cash. Very soon goldsmith discovered that they could lend by issuing deposit receipts far in excess of the deposits lying with them. As only a small portion of the deposits was actually withdrawn by the deposit holders or the customers, the remaining part of the money left with the goldsmith themselves, in which case the goldsmith started lending by issuing those deposit receipts. And this is the process of creation of money that in the modern times we find. What that banker will do, as I told you just earlier, banker by accepting rupees 10,000 from, banker in the course of the banking operations, he accepts a deposit from the public, correct? And he lends it several times to several customers. And each time he lends, he doesn't pay the hard cash. He, in fact, the lent money thereby deposited into an account thereby opened. This is the form he creates. He lends that 10,000 to several customers several times. And at each time when the loan accommodation is given, the money that is accommodated will not be paid in cash to the borrower, but it will be credited to the account. The money still lies with the banker only. Therefore, he created money. Initially there was 10,000, but now how much is there? The 10,000 is multiplied by any number of times you lend, that many number of times the amount is accumulated. Manufacture of money. That is why we owe a lot to this kind of functioning. We owe a lot to goldsmith, because they found that money deposited with them was not withdrawn in full by the customers. Only a portion of money is withdrawn by them as and when they needed, but larger portion of money, a greater portion of money left still with them. And they started, utilizing this. Whatever money that still left with in the hands of the goldsmith that belonged to the customers, they started lending. And by issuing this deposit receipts, goldsmith discovered that they could lend by issuing deposit receipts far in excess of deposits lying with them. And this is what they could lend far in excess of the deposits lying with them by issuing this deposit receipts. That is what, when they accept your deposits, they could lend far in excess of the deposit they have by issuing loans. That's what today, and today's function we owe. Customers have deposited the money with them. You issued the deposit receipts. You issued the deposit receipts to whom? To the customers. Customers started moving the deposit receipt from one person to another person to borrow the money, to get the money and all, to fulfill their needs. And in course of time, what they did? In course of time, check system started. They used to give the instructions. And in further, when the time improved, when the time moved by, they started the modern function, creation of money. That means they found that only a small portion of money deposited by them were withdrawn by the customers. A larger portion remained with them. With these, they have started lending it. The goldsmith started lending it. Thereby, they started creating money out of money. Many number of times they started lending the same money, and that's a way that whatever the money left in their hands, unutilized by the by the deposit holders, they thought that this can be utilized for lending. They started lending by issuing the deposit receipts only, and therefore the money still remained with them. How many times they have started lending? With the same money, with the money they have, money will still with them, and they have only issued the deposit receipts each time when the loan accommodation is given. Therefore, the modern function of manufacture of money, that is creator of money. Banker is a goldsmith started doing this kind of process of a creation of money, was discovered by the goldsmith. Today, it's one of the biggest contribution. It seems it's one of the biggest contribution the goldsmith ancient type of functions. So goldsmith after accepting the jewels or the documents or the money in the initial stage, they acted like caretakers. In course of time, it became popular as a banknote type, and in course of time further, when moved, it became like a check system like, and when moved further, it became like a creation of money function like, because Goldsmiths found that only a small portion of the deposits left with them was actually withdrawn by the, only a small portion out of the deposits left with them was actually withdrawn by the depositors, and a good portion of the deposits was left with them only. So the Goldsmith began to lend a part of the deposits left with them, and while lending, Goldsmith gave only the deposit receipts and not the cash. Goldsmith gave only the deposit receipts and not the cash. Very soon Goldsmith discovered that they could lend by issuing the deposit receipts far in excess of the deposits lying with them. As only a small portion of the deposits was actually withdrawn from them, they could lend a bigger amount also by issuing the deposit receipts. Thus, the process of creation of money was discovered by the Goldsmith, and this is why it is called a major contribution as far as the banking operations carried on by the Goldsmith, and they really laid the foundation for the banknotes, for the check system, for the the manufacture of money, which the modern day banker carries on in a larger scale. So bank in itself therefore is not a dealer in debts, but is a, in fact, is in real sense is a creator or manufacturer of money as such. And then when we move further, we will see during the pre-independence stage, banking in pre-independence stage to indigenous bankers. See, during the indigenous bankers have been operating in India since from the very ancient times, even to the even up to the stage of pre-independence stage. And those indigenous bankers were called by different names in different areas, like Multanis, Marwaris, Setus, Jains, Gujaratis, Chettiars, Shrobs, Baniyas. In different, and Tamil Nadu they call it as Chettiars. In Gujarat they call it as Marwadis, the Setus, etc. And in Karnataka we call it as Ejmans, Jains, etc., etc. So what do you mean by the indigenous bankers? What do you mean by indigenous bankers? Indigenous bankers means they carried on banking business on indigenous, ancient lines. It means in their in their regional language, in their vernacular language, in their regional lines they used to carry on. Their area of operations is also not vast. It is very much focused only to their region, and hence they would meet these indigenous bankers having money. Once again I said their banking operations were confined, limited to whatever monetary ability they had, and not beyond that. And they would features of indigenous bankers in different parts of the country. Their names were quite different, and it is not confined to one. In Rajasthan, you would call them as Baniyas, Saukars in Punjab, Mahajans in Punjab, and Chettiars in Tamil Nadu. In different parts of the country, indigenous bankers are the individuals or the firms dealing with the banking business, and they are known by different names in different parts of the country. And what are their features? Features may be indigenous bankers have been working in India from the very ancient times. That is one of their to be identified that they are the bankers since from the ancient times. They have ancient origin. That itself is a greater feature. And they conducted on indigenous or local or native lines, and not on the western or modern commercial lines. They carried on their whatever monetary operations or banking operations in indigenous. Indigenous bankers means local bankers. Indigenous bankers means regional bankers, and not in the modern or western type of process. 2, 3. Indigenous bankers generally confined to small towns, village, semi-urban areas. Understand? Indigenous bankers are normally, whatever indigenous bankers, whatever name by name you call, They relied their own money. And they carried on their operations, and that was confined to their area, like town, semi-urban area or villages. Then indigenous bankers were known by different names in different areas. Acceptance of deposits is one of the features of indigenous banker, of course, but though the deposits are accepted by indigenous banker, the acceptance of the deposit is not an essential part of though they have accepted the deposit from the public, but acceptance of deposit was never considered as features of indigenous banking. Normally these indigenous bankers, called by different names at different areas, they were affluent by themselves. It means for the purpose of lending in their own respective areas, they relied on their own money. Not that they would never accept the deposit from the public. That was not considered to be the feature of indigenous banking. They would accept, of course, but not that accepted money only would be, lent. It is not like that. So I will tell you, though accepted money from the public, but that was not considered to be essential feature of indigenous, banking. These local bankers, by different name, they called, Saukars, Chettiars, Setus, Ejmans, Marwaris, Shropes, etc. These names will not come to any person. These names would come to such persons who are living in their respective areas, provided they are affluent, wealthy. And when they are affluent, wealthy, when they are, identified like Saukars, Baniyas, Shropes, Setus, Marwaris, Chettiars, etc., it means that normally for carrying on lending operations, they relied on their own money. Not that they were not accepting money from the public, but it was not essential function at all. Acceptance, modern function, in order to term an institution as a banking, both must be present. Acceptance of money from the public and lending by way of investment or loans. Both should be present, because they are the main function. I know that today banking is no more confined to those two essential, acceptance and lending. No. But tell me, without that, can it be a banking? You may carry on extra, incidental, ancillary, subsidiary or agency services, whatever services today you carry on. But these cannot be carried on without your identity as a banker. A banker carries on. So you ought to be calling it as a banker. Over and above all these, over and above the main function of banking, you can carry on these. But you cannot carry on these other functions at the expense of main banking. Main banking function continue to be the focus. I know for your earnings sake, you have expanded your banking operations. But actually, you are called banker not because of your other operations, but because of your main operation. Acceptance of deposit from the public and opening various accounts and lending of those funds. Acceptance of deposits and lending or investment. These two should be the main function of banking. If it is not, then it cannot be called modern banking. It can be called any of the ancient banking, even indigenous banking. I said indigenous banking, they were not accepting. I said money lenders, it is not that they were not accepting. In times of emergency, they would accept, in case if they found paucity of money. But otherwise, they would deal with their own money for the purpose of lending. So that's what I said. Acceptance of deposit is not an essential part of indigenous banking, of course. Then they combine banking business along with a banker may carry on other operations, not at the expense of a main banking business. But indigenous bankers, they used to be the traders. They used to have their personal dealings. Over and above that, they used to carry on even. So they were not at all carrying on only in the banking functions. They combined the banking functions with the non-banking functions like trading and all. But a banker cannot. A banker cannot do that. In the modern times, a banker can give services, extra services to the customers at a cost, but you should not mix the main function with the other function as such. But that was That's how it is organized today, and that was not so in the past. There was no statute at all, and they carried on all type of functions along with the banking functions. Why? So as to be profitative. Otherwise, they would not be. There was no law, and therefore they are quite unknown to the modern banking sector as such. They maintain their business accounts in their local language, but we maintain the modern business in the acceptable common language. What is that common language? Most acceptable common language is English. It's a universal language, but it's not so. In the past, these people had their business of banking, whatever limited business of banking, they in their own vernacular or local lines. Okay, then they modern banks rate of interest for acceptance of deposit and lending, it's regulated by Reserve Bank of India. But it's not so. In the past, their business of banking were regulated by themselves. It means they used to charge a higher rate of interest. As I said, in emergency they would accept the deposit. In case if they find short of money, they would accept money from the public for the purpose of lending, because there is more demand for borrowings. When they find more demand for borrowings, they would accept the deposits. But when they accept the deposits, whatever rate of interest they pay for the deposit holders, it would be much greater to the whatever rate of interest they pay in the modern times. But as far as the lending is concerned, though they are not subjected to all these secured principles, but as far as the lending is concerned, they would lend at a very, very high rate of interest, and therefore it was quite expensive to approach money lenders or merchant bankers or goldsmiths or indigenous bankers for the purpose of borrowings. Very, very expensive, and there was a stiff competition. And this competition is unguided by any principles in those times. Whoever able to show the strength, they would succeed. But today it is not so. There cannot be unhealthy competitions among the banks. You cannot, whether it is Karnataka Bank, whether it is Baroda Bank, whether it is Syndicate Bank, whether it is Corporation Bank, whether it is State Bank of India, any bank, whether it is cooperative or this, you cannot indulge in unfair competitions. You cannot say that, come on, I will give you housing loan at the rate of 6%. You cannot do it. You are governed by RBI guidelines. You are governed by banking regulation provisions, and if you violate them, your license will be cancelled. But not so in the past. In the ancient system of banking, whoever clicks, he clicks, and he is not guided by any guidelines or whatever. So it were entirely dependent upon the dictations of the concerned lenders, concerned indigenous bankers. Indigenous means local, Deshiya, Staliya, we call it as. Not that indigenous means something. Indigenous means Staliya. Andre, India has got several parts, and they were named according to their regions. They carried on according to their language, and they relied on their own money. Not that they were not accepting money from the public. Very hardly they used to accept. So that way they lend both the short term, medium term and long term. Long term loans they desisted. But normally 2 terms of loan they give. That is short term and medium term loans. And long-term loans granted only to those against the security, reliable security. Okay, but they were helping. Remember the contribution of indigenous banker, the contribution of money lenders, the contribution of goldsmith cannot be ignored. As I said, the contribution of goldsmith is huge. The modern system of banknotes, check system or money creation is originated from the business of goldsmiths. And the international trade, it were helped by merchant bankers, and for any small borrowings you needed money lenders only, and in no time you could get that fast cash, but unfortunately at high expenses. In other words, the cost of those loans were very, very high, as the rate charged by the money lenders were high. And then indigenous bankers, different parts of the country, just during the pre-independence stage, and in the post-independence, that's what, in the post-independence stage we have our entire banking operations controlled according to the Reserve Bank of India Act 1934. Reserve Bank of India came into force in the year 1935, and it is nationalized in the year 1949, and today it being the parent bank or central bank, Reserve Bank we call it as in India, Reserve Bank of India. As such, it is a supreme bank, and it is the one regulator And besides that, even licensing, according to the RBI guidelines, the licensing is also for the banking operations could be given under the Banking Regulation Act. You are regulation as when you get the license, how to carry on the banking operations. Regarding merger, regarding acquisition, regarding winding up, regarding management of the banks, etc. You are guided by the Banking Regulation Act 1949, along with the RBI directives, which RBI being the parent bank. Though licensing and other aspects are governed according to the Banking Regulation Act, as far as the operation, supervision, controls is concerned, we are guided by our parent central bank called Reserve Bank of India. Okay, and that is the post-independence period. The banks today has grown since from 1950. I can tell you, since from 1947 when we became independent. What is the growth of modern banks? If you look at 1950, 60, modern banks, whatever banks growth during the post-independence period is not that fast as we find in 1990, I think 2000 onwards. 1990 to 1999, it's one way. Of course, the banks have started expanding their branches, but not at the rate. If I remember 1990s, still banks branches were limited. I think all over India, the total banks and their branches would not have been, in 1990s I am talking about, would not have been beyond 30,000. But what are the branches today that in India we have? Of course, it is an era of merger and acquisition. I agree that one major bank purchases another bank. Like S Bank is being now ready to be purchased by SBI. And all those State Bank of Hyderabad, State Bank of Mysore, State Bank of Travancore, all those are acquired and merged. And even Vijaya Bank, even Bank of Baroda, Vijaya Bank is merged with the Bank of Baroda, called Bank of Baroda. And there is again, these mergers are now happening. You understand? Today the era of acquisition and mergers. But in the process, there should not be an era of liquidation. Because if that happens, then all customers will go moneyless and they will suffer a lot. So banking operations are to be carried on according to the banking lines, strict guidelines, supervisions, controls, etc. So you can, as far as the history of banking is concerned, modern banking, if we look at the post-independence, early stage of post-independence era, banking operations, how do we find it today? It was never ever. As I said, today, over 1 lakh branches. Look at this cooperative bank. Look at this land development bank. Look at this regional rural bank. Look at this foreign bank. Look at this investment bank. Look at this industrial banks like ICICI. So many housing banks. I mean, so many banks with their branches have come into fore, and the branches of all banks put together would be, SBI itself is having 22,500 branches. Canara Bank is having about 6,000 branches. It means Karnataka Bank, Syndicate Bank, Vijaya Bank are all having nearly 1,000 to 2,000 branches. Cooperative banks, in Bangalore only we have got the Apex, Karnataka State Cooperative Bank, so-called Apex Bank, it is having about 34 branches. Each district cooperative banks is having their branches, including all branches put together, they will have about 50 to 60 branches in each districts. There are 30 districts in Karnataka, 670 odd districts in India. And if you consider those branches, what will be the total? Why I am giving this is what the stage in the modern times we have. Modern banks have grown to that extent, but soon after independence, early stage of post-independence era, we did not find this. The branches were limited in number, their activities were limited. But as and when we entered the 21st century, I will tell you, since from 1999-98, the introduction of software technology to bank, the bank's rate of growth is unimaginable. It took 50 years to find 1 year's growth since then. Year after years, the banking growth with the use of technology has been enormously, I think it cannot be seen, it can only be felt. That is the kind of growth that we find. So up to the present stage of Indian banking, can I give you the history? You will go to that temples, place of worship or public places used to be. Okay, I'll tell you, in the olden times, way back in 80s, 60s, 70s, how the postman used to deliver the letters. He would go to the school. You understand? Because there will be assembly in the evening for national anthem. And just before the singing of national anthem, postman had already come to the school. In the village you have one school. And there will be 40, 50 or 10 or 20 letters coming to that village. And what he will do? The postman of the post office, he will go to the headmaster and pass it over. Headmaster, before the singing of national anthem, he will announce, yes, I think the children of each of those are studying in the school. See, easily. This is the brain of the postman who delivers to all the concerned in no time. Otherwise, he would have gone separately to each of those houses. It would have been very difficult. Likewise, he found that will be ideal place. But a banker, a person who is affluent, wealthy, he cannot go to the school to transact banking business. He has to go to the public place. What is the public place? Market, place of worship, etc. I mean, in those places, you sit there and you will be identified in course of time as a money lender. Like we have seen that growth of modern banking, his brief history we have referred, and then finally we need to discuss about the classification of banks. Banks are classified into central bank, saving bank, commercial bank, agricultural bank, then industrial bank, foreign bank. All these are all the types of banks as such. Do we have any extra type? I will tell you. I will get you. It is commercial banks. Commercial banks are also called deposit bank. It is savings bank. It is agricultural bank. It is industrial or investment bank. Okay, agriculture or rural bank. And it's a foreign bank is called exchange bank. And there are also, first of all, I told you, it is topped by central bank. We have given a nomenclature in India as Reserve Bank of India. Okay, this is what the classification of bank. And we need to discuss about the commercial bank and its functions. Okay, that is more important. Commercial bank and its functions. Then we can move on to the other type of course, each of the bank. What is the role of central bank? In India, we call it as Reserve Bank of India. In the second unit, it is separately discussed. Reserve Bank of India, its management, its departments. There are about 12 departments to Reserve Bank of India, and it is managed by board of directors headed by the governor, deputy governors. It has got 20 like that, and then functions of Reserve Bank of India are threefold. One is central banking function, another one is supervisory function, and last one is promotional function. We will deal with that second. And in the second unit you have got one more, Deposit Insurance Corporation of India, Act 1962. Okay, but in 1972 it is altered and known as Deposit Insurance and Credit Guarantee Corporation of India as such. Okay, we will discuss in the next clip about the functions of commercial bank and its contribution, its role to the growth of Indian economy.